morning and welcome to another edition of Energy Action's Market Wrap. My name's Scott Easton and I head up the trading and pricing team here at Energy Action. Today I'd like to provide an update on electricity market prices and answer the question, when is the best time to extend or renew your electricity contract? I'll also be discussing the outlook for gas pricing and the options available to our customers to reduce their gas expenditure. So let's get started. Over the past few weeks, we've looked at the contract pricing for electricity and explored why prices have decreased so dramatically since November last year, which is primarily due to the increasing amount of renewable generation capacity. This week, we answer the question, when is the best time to lock in a fixed price contract? And to answer this, let's take a look at the wholesale price of electricity. We'll consider the retail market shortly. All state markets shown here continue to demonstrate a downward trend in prices, with Victoria and South Australia showing the greatest declines. In New South Wales and Queensland, we're seeing prices for calendar year 2021 to 2023 start to flatten out or trend sideways. This can suggest that prices are approaching the bottom of the current pricing cycle. So when is the right time for a corporate customer to enter or extend their fixed price contract? Our view is prices are approaching the bottom of the current pricing cycle. And the reason for this view is because quarterly pricing in New South Wales and Queensland is approaching the cost of generation. While vertically integrated generation and retail companies can shift revenues between these market segments, we consider current pricing levels will need to increase over time to provide adequate returns to the generation segment. Moving to the retail market for electricity, we're also seeing a battle for market share between the big four retailers. This is great news for our customers, who stand to benefit from aggressive retail pricing and greater competition. In our view, the best time to go to market and seek pricing for a contract renewal or extension is now, to take advantage of electricity prices that are at or approaching the bottom of the current pricing cycle. By recontracting now, corporates can also take advantage of the current battle for market share amongst retailers. In some cases, we've seen corporates contract half compared to their 2018-19 costs. Turning now briefly to the gas market, we continue to see improved supply conditions placing downward pressure on prices. Gas producers geared up production for increased export market demand in response to high 2019 retail prices. In 2020, we've seen slower economic conditions and lower export demand compared to the 25% increase in new gas supplies, representing approximately 100 petajoules. We expect wholesale gas in the short-term trading market to be priced around $5.80 to $6.50 a gigajoule during H1 2020, and retail gas to be priced between $9.95 and $10.50 a gigajoule. We recommend our corporate clients seek pricing immediately with a view to entering a 1 to 2 year gas contract. Alternatively, contact us to see if a wholesale arrangement is right for your organisation. Now turning to environmental certificate markets, LGC prices traded up earlier this week to $38 on the back of buying demand. Prices dropped back to $34 a certificate yesterday. For other certificates, STCs remain stable at $38, Eskies have increased to $26.50 and VEEKs have risen to $35.70 a certificate. In the news this week, while coronavirus dominated news headlines, energy market news includes Angus Taylor's announcement to put an end to late payment penalties from dodgy retailers. Retailers face fines of up to $100,000 for imposing penalties on customers beyond a retailer's reasonable costs. In other news, an increasing number of global organisations are committing to decarbonisation plans. AstraZeneca announced its Ambition Zero Carbon, which is a strategy to eliminate emissions by 2025 and be carbon negative across their value chain by 2030. Similarly, BP has set an ambition for net zero emissions by 2050, covering the operations of its businesses worldwide. Well, that concludes this week's Market Wrap. I'm Scott Easton for Energy Action, and remember, don't pay too much for your energy.